They're thinking of not just making some money, but really building a dynasty.
Not even just my lifetime. What's the lifetime of the next generation? What's it going to look like in 100 years?
The tax law is written in favor of business owners and the rich.
It is.
Welcome back to another episode of Dan Lok Advisors, where I bring you my personal advisors to educate you on finance and business. Now today we have a special guest. Carl is not only my personal advisor, but he also advises ultra high net worth individuals in Canada, from multimillionaires to billionaires. So today we're going to talk about how rich legally actually avoid paying taxes in Canada. So how do we do that?
So there's 5 different things that we'll go through in talking about the way that the rich avoid taxes. Number 1 is a dynastic mindset.
Okay.
So when you look at rich people, they think long term. So they're thinking not even just my lifetime, what's the lifetime of the next generation? What's it going to look like in 100 years? So when we focus more on the long term, we've got a lot of time to figure out what kind of tax structures we're going to put in place to manage any kind of events that come up.
So it's like more a long-term thinking.
Exactly.
And I think this is also before they even have the money that they have today. I think it's that long-term thinking that they focus on that helps them create their wealth.
Exactly.
Right? So they're thinking of not just making some money, but really building a dynasty and leaving a legacy.
Exactly.
Got it.
So when you think of people who are poor, they think a little bit more reactionary.
Here's my tax return, I got 30 days, let's get this done.
Yes, exactly, that's it.
Help! Does anyone have a calculator?
So not really a lot of strategies, not really a lot of planning, just, I got my taxes.
Very reactive.
Exactly.
Yes, okay. So having the dynasty mindset. Got it.
The next thing that's important, and that really makes a distinction between the rich and poor from a tax perspective, is the rich tend to make their money from business activities.
Okay.
So they will have a corporation, and there'll be active business income that's going through that corporation.
And in most cases, they have a lot of corporations, a lot of entities.
Right, and even those investments that they make will be an active business. It
Correct.
will be active business.
Correct.
They may be buying real estate and managing that real estate. So as a result, they're paying 27% tax or 11% tax.
In Canada.
Whereas the poor, they're typically employees. So they've got really nothing that they can do except receive their T4 at the end of the year and pay the tax.
And pay the tax, and that's it. It's like an invoice from the government.
Yeah.
It's not much you can do, right? And then there's no deductibles and no write-offs. You can't flow through any kind of revenue. There's nothing you can do.
No! God, please, no! No! No!
Because the tax law is written in favor of business owners and the rich.
It is.
That's what it is, right? So you have to understand the rules and why the tax law is written that way. Because the government wants the rich to create more jobs, to create more opportunities, to hire more people, to really grow the economy so that more people could pay tax.
So number 3 is they make a tax a factor in every decision they make.
I love this. Yes. So they're not just making an investment, but looking at what are some of the tax that I might get taxed on this. Do I get taxed on capital gain? How would I be taxed when I sell this? So they think it through because that affects the return.
Yeah, it's a little bit more sophisticated than the poor person who will look at something and think, wow, I can make a lot of money. I just throw my money into that.
Oh, I'm gonna buy this stock, I'm gonna buy this cryptocurrency, I'm gonna get X amount of percentage return. Speculator, right? Versus factoring in how this will affect in some way my other investments. It's a full picture, isn't it?
Exactly.
Right? I make this move, I do this, how would that affect everything else? How would that flow through? How would that affect my other entities and everything that else we do, right?
Yeah, very holistic, more integrated
I like
approach.
that. I like that.
So number 4 is that rich people have tax advisors.
Yes, and when I say tax advisor, I don't mean your brother-in-law, your sister-in-law, right? That's not what we're talking about. Very much so, investing in business is a team sports, right? That we have the best advisors to tell us, hey, what are some of the things that we need to know? And every single person is a specialist. One thing I've learned from some of my mentors, that what I've seen them done is when they have a meeting on finance, they would have a big room of people. You've got a banker, you've got a tax strategist, you've got a lawyer, it's in a boardroom. So they make the decisions. Yes, the wealthy person is the kind of the leader, the decision maker, but he or she listens to advice from everybody. Right? And everybody's got their take on different things. And taking their advice and then before they make that final move. And absolutely, that advisors. And I always look at someone, you want to know how good that person is, look at their advisors. That tells you everything you need to know. Everything you need to know. If your advisor is a bookkeeper, your brother-in-law is like a part-time, accountant or something like that, yeah, chances are you're not going to get very good financial advice. Right? You want someone like Carl who advise someone who are ultra high net worth individuals, who advises those people, and they know, they know the strategies, they know what's needed. Right? You want someone to be able to advise you at that level, even though you're not at that level yet, right? Because you will grow to that level.
Exactly. And then the plan ahead. So when we look at rich people, they will actually look at how they're going to exit the situation that they're in right now. So are they going to sell their businesses? Are they going
to have someone to take over the business? Are they have a succession plan?
Exactly.
Years ahead of time, in fact.
Exactly.
Not like
30 years ahead.
30 years ahead. Wow. Wow. And that ties back to the mindset in the beginning, thinking about the dynasty.
Yeah, it does. And the other nice thing about thinking about it so far ahead is that now we've got 30 years, we can whittle down that tax over the next 30 years. So with that amount of planning, we can actually make sure that a lot less tax is paid from a very practical point of view.
And here we just give you kind of the overall mindset, how rich think, how they think about taxes. There's a video that Kyle and we did on a tax saving framework and triangle. You can click here and watch that. In the meantime, make sure you hit the subscribe button and turn on notification and ask us any questions that you might have, or for Kyle next time when I bring him back on, that we can answer some of those questions as well. Until then, we'll see you next time.